All right, good morning, everybody. So, pretty good moves yesterday. It's interesting that I had a number of people reach out and say, hey, I thought it was supposed to be a sideways day. It wasn't a sideways day. There's known, unknown news like QRA, FOMC, non-farm payrolls. We know that news is coming, even if we don't know what the news will be, right? So those are known unknowns. What happened yesterday was an unknown news that hit. And when we have just surprise unknown news hit, the market reacts often violently. Japan was supposed to be looking at a 15-point change in their rates, and they went with a 25. They didn't do it yesterday. They announced, or the rumor started that they were going to do it. They ended up doing it in the overnight hours. I did talk yesterday about Japan and their rate decision, and I had mentioned that they were going to be doing it. But the news yesterday was the rumor or the leak that instead of a 15 basis point, it was going to be a 25. And the market just took off from there. The main thing when we get something like that happening is to recognize that something has changed so that we know our first approach at whatever our plan was for the day is suddenly about to change. This was the picture I grabbed yesterday when the news came out, and this is my local time. It's 10:04, so it would have been 11:04 market time. Imagine that on the clock, right? 11 a.m., 11:30, 1 o'clock, 10, 10:30. Watch the clock because it's one of the best indicators you can have. Most news is going to come out on that time frame, even when it's supposedly a surprise. But this was the news that moved the market yesterday. So when things change, we try to find out why it changed to know if it's going to stick or not, and then build a new game plan afterwards. And that's really what it's all about, right? Have a plan and then have a alternate plan. Japan is down this morning 1.5%. The NASDAQ is up 1.5%, and everything else is in the middle. Hong Kong is basically flat with the Dow. The Russell is up more than a half, and the S&P is close to 1%. I mean, the markets really seem to have rebounded off of that low, but we're not done yet by any stretch, right? It's interesting that Microsoft, I mean, they spent more money on AI than anybody wanted to hear about. And so if you're listening to any of the news out there this morning, you're hearing CapEx a lot, capital expenditures, just cost spending. And it's the theme, but it's not new. We've been seeing this all year. Every company like Adobe and all those others that have jumped on the AI bandwagon and had announced, oh, we're going to spend money on AI because it's going to help us make money as a business. Every one of those companies that have failed to show on the other end of all that spending a vast increase in their business structure has gotten punished. So Microsoft had some decent numbers. Their cloud services are slowing down a little bit, but they're, for the size of that company, they're still doing really well. The market didn't care. They got a little bit of a beat down. But I bring up Microsoft because there is this phrase in the market that says, if they won't own the darling of Wall Street, right? If they won't own Microsoft or Apple, why would they own anything else? Implying that if they dump that, they'll probably dump everything. And that's been the concern, right? What if the Mag 7 misses or doesn't perform to the market's expectations and the Mag 7 sell off? Are we going to see a sell off in the market? That's been the big worry. And then there's this. This is unweighted S&P combined or divided against SPY. So it's a ratio chart. That's what the candles are showing. RSP divided by SPY. It's basically a ratio chart of the weighted versus the unweighted index. Now, on the other side of that is this orange line, which is just the SPX, right? The fear has been if the Mag 7 don't live up to their expectations and sell off, that the entire market would sell off. But there's two ways that this can go. We can see them slow down, and we can see the rest of the market start to get caught up. So this is moving to the upside, and this was moving to the downside, expecting these two to meet, right? We sell off because of the Mag 7, and we rise up in this RSP versus SPY because the rest of the market is coming in. This is rising more than this is falling, implying, and like we saw in Microsoft last night, that even if the Mag 7 miss, markets very likely won't sell off. Microsoft missed, it's down, everything else is up. Now that's just one name, and it's not the entire Mag 7 group, but it's a good start that Microsoft didn't please investors. It's down. The rest of the market is not down. We could see the rest of the market play catch up while these Mag 7 take a break and not get a crash and burn in the market. It still remains to be seen, but it's the goal right now, right? After Microsoft missed, if you'd have asked me ahead of time, what do you think the NASDAQ is going to do if Microsoft misses? My answer wouldn't have been, I think it'll be up 1.5%. We're going to get some job numbers today. The ADP, we're going to get the QRA at 8, I believe. Maybe 8:30. Pretty sure it's 8. Just checking my notes here. See if I had it somewhere. No, my notes just say today, this morning, but I don't have a time on it yet. $8:30. Got it. Okay, it is 8:30. I had to dig. So we're going to get QRA at 8:30. Notice it's not here. It's not in Seeking Alpha or TradingView or Thinkorswim or any of the other places, Finance Juice. You're not going to see it. You got to go to the Treasury website. But we're going to get that. We have FOMC today, and we have ADP today. These are all very big things in their own right. They're big enough to be, a standalone event, and we're getting them all just kind of wrapped up together. So it's going to be a heck of a day. Proceed with caution is the drumbeat. Toyota stock is kind of our Japan proxy play. And someone was asking the other day, why are they not doing better? Well, it seems that there's been issues, right? Kind of catch this certification violations. Having issues with spot gamma today, so I don't have the levels. That's what happens when you have a comp account. So got to wait for them to get around to answering my emails and figure out why I don't have access. So kind of on a hurry up and wait. It's interesting that Monday and in the overnight into Tuesday, what we're looking at here is a weekly volume profile. So this was last week's profile, And this was last week's point of control. And I had shown this in pictures at different places, and I had a few people ask, what are we looking at here? We're looking at that point of control. It was the level I kept pointing out in the pictures. Last week's point of control was acting as a pretty good line in the sand. When we sold off Monday, that was the level where we found support. When we sold off Tuesday in the Globex or in the overnight, that was again where we started to find some support, which of course was also yesterday's Monday at that point. So we had more structure there than before. But it was a level of interest. We still have this one overhead. That's 5611 cog line. If we make a move to the upside, right? If we break Monday's high and we continue to head up, we've got 5532 cog line, which would be 2 weeks ago, Friday's low, right around that area. It's not perfect. But then we have this high volume node up here to deal with, that 5611 cog line area. It's also a gap close that we need to fix between Tuesday and Wednesday of last week, right? When we closed on Tuesday night and we opened on Tuesday night. It's a gap close there that needs to be resolved. Now that level didn't hold us, right? We ended up breaking through that level. Still, it's a level worth watching, right? It was. Not anymore. But that's why I had shared it out Monday and even Tuesday. I pointed at it. This is today's ADR. We're already through the red line. We're already through the yellow line. That's a lot to move in a small period of time. And a concept that a lot of people forget is that the day is half done already. I know, you just got out of bed. You're just getting started. But we started last night at 6, and it's past 6 now. So half the day is already done. We've already made an exaggerated move. We could go higher from here. Absolutely. Price can always do whatever the heck it wants. And we're only up 1%. We moved more than 2% the other day to the downside, but still a 2% move is nothing. We've seen that happen multiple times, up and down. The lock limit kicks in at around 7%, and we've triggered that before, right? So even a 7% move isn't off the table. There's no reason for us to think we're going to see 2%, certainly not 7, not today. But there's always that possibility, right? The fact is, though, when we get to the yellow line, we expect the market to stop. And sure, there's been times where we've gone farther than the yellow line and we just kept going and going and going. Absolutely, it does happen. But generally speaking, that's the line in the sand. That's typically where we stop, especially if we get to it really early in the day. So one trade setup that I really like is when we come back inside the level. So for an example, yesterday when we got down into that yellow line and we left the zone, or back here when we got back into the red line, right? Those make for a really good play. If you didn't catch it on the move into the line, catch it on the way back out of the line. So I'll be looking for us to leave that yellow line to the downside, but not part of any of the announcements. So for an example, we're going to get QRA this morning. If that is a big CPI style candle, some really big monster economic candle print, then it's probably not going to be what I end up playing, right? It's not what I'm looking for. Thought I had a good one back there. We are back to the weekly pivot. This shouldn't be a surprise that that thing doesn't move. It's been there all week. I mentioned yesterday how we had a really narrow daily channel, and that if we don't expand on that very narrow channel day, that we would likely do it the next day. Well, we ended up expanding yesterday. So a lot of that energy is already spent. And today we have a wide channel again. It's worth noting how these events that are in the future, and we look at them, we can see them coming, the known unknowns, they start to get hyped up bigger and bigger, right? Like I've been talking about QRA for weeks, and Monday afternoon, we're all waiting because, I mean, keep saying how important it is, and we get QRA and nothing. I mean, look at Monday. You would never know Monday afternoon we got really big data like QRA because there was just nothing. Part of that is because the announcement is we're really not going to change anything and we're just running status quo. Thanks. Have a good day. So if they don't change anything, they don't even propose a change of any kind, then there's nothing for the market to react to. But that was the proposal, and today we're going to get the actual numbers. We could see a change. But on the other side of that, when everybody knows that there's something coming, they hedge. And like we saw yesterday, when they're not prepared for news and news hits, they're all scrambling to do the same thing all at once. Yesterday, everybody was trying to exit, and so the market moved really fast to the downside because they were caught off sides. They weren't prepared, they weren't hedged, and sold off really fast. But that was an unknown that hit us. Today, it's a known unknown. It means they're going to hedge. There's no reason for them all to scramble to buy or scramble to sell when they already are hedged. There's no pain there, right? They're not left behind or caught off guard. Once you're hedged, it doesn't matter what the market does, up or down, you're good, right? That's the whole point of having the hedge on. And we've seen those time periods where we're waiting on events like FOMC. And as we get closer and closer, it's hyped up more and more. Oh, it's a big one. This is a really important one. Oh, man, we're going to make these big moves. And then we get it. And sure, maybe we do gyrate up and down and get a pretty good size move, something like that. And then it just gets undone, right? Just like yesterday, it gets undone. We had the big move down, like a big liquidity gap, and we ran right back up again and closed that gap. So could we get some big moves today? Absolutely. But we don't expect any of these moves to stick yet. We still have to make it to the end of the week. We still have to make it till the end of the day. Even the data that we could get this morning from QRA could be wiped out this afternoon when we get FOMC. So these are the FOMC events that are marked out. And the QRA, or I add CPI here. We just keep stacking these up, right? More and more. There's times when the market gets data and information and it radically alters the makeup of the market. One of them is the 2022 bear market lows. And we came out of that and everything changed. Or January into February of, say, 2022, before the bear market really kicked in, when we got QRA and FOMC, and it really was just the last straw. So there's been times where we get this data and it changes things going forward. But a lot of times on that day, and even for the rest of that week, it's kind of status quo. Here's a good example where we had FOMC and we didn't just crash and burn there, right? We finished it off, had a whole week and a half. What is it? 3 weeks before it started to turn around and head to the downside. And that was our 6.5% pullback in April. So I wouldn't expect all your answers today, right? We got to get the data and see how the market is going to digest it and apply it. Finally getting that move in crude to the upside. And gold, you know, with that move in Japan, I kept watching this, expecting to see that move up, and it didn't come, and it didn't come, and it didn't come. And finally I said, all right, screw it. I guess it's not coming. As soon as I looked away from that, it made the big move. Isn't that fun? So you don't catch them all. But the move is done. For gold, now that we've already got the move, it's hard to see the idea that we're going to get another one out of it, especially with this move that we just got here. And we didn't see any response out of gold from it yet, right? Really nothing. But we are seeing moves in crude. And I'm bringing these up because if it's going to be weight on FOMC today, which I'm not really sure that's what we're going to get because of QRA. But if it is weight on FOMC, we want to do something, right? Today could very much look a lot like Monday. And I would rather trade something that looks like this than something that looks like that, right? We got the dollar back down around that 4%. So that's kind of the level we want to see. Get below that, and we could see a change in market dynamics. And the 10-year is still around that 4.1. We got to break 4.1 and really get that thing down around 4%. Right now, it's not about tick for tick. So the dollar ticking up, we don't expect to be, you know, an immediate impact up or down on the S&P and the NASDAQ. Those days are gone. But you do want to keep track of where the dollar is, what it's doing, and especially what level it is. Right now we're running 104 and above 104.5. So if we get above 104.5, we could consider some impact dynamics to the market. If we get below 104, we could consider the same. But if we're just going to continue to chop about here, then we're not looking at the dollar to provide any real insight. These spot gamma levels are not accurate. I don't have today's. Just turn them off. We're back above the 10-week. We're interacting with the 10-day, and we're right underneath the 3-week. And still overhead, we got the 20-day. There's no market maker move yet, so they're not hedging yet. And I'd like to say they're not hedging because QRA has already made it clear that it's just going to be same old, right? That there's nothing new coming for this QRA session. And it's just same old. I'd like to say that, but it's such an unknown. There's so many people who say, what the heck is QRA? I never even heard of it. You'd like to think that they and them, those, the institutions, the CTA quant funds, hedge funds, that they they know this is coming and that they're hedged already and they don't need to hedge today. Give them the benefit of the doubt. Nothing changed on this profile yet. It's exactly where we were. We do have this shallow area above. So if we can get that 55.32 cog line breakout, then we really don't have anything holding us back until we get back into that 5,600 level. It's worth noting that we didn't get a significant amount of volume at the lows yesterday, right? It's not like we came down into an iceberg and got bid up off of those lows and a solid level was developed. Sure, the profile is still in the lower portion, but it looked like they tried to save it and then they got ran over. Still, we want to mark that level. It's not a VPOC because we opened around there and we chopped into it. We've cut through it. But if we go down today, you're going to want to know where that level is. This is just a POC. It's not a VPOC. And this morning, all of our volume is up at the top, even though we did the greatest amount of trading here. We've got the greatest amount of volume here. We can see the point of control in green for the volume profile, and we can see the point of control here on the blue, which is TPO, time, price, opportunity. I know they look like the same thing, but they're two different types of profile. I'm not feeling overly bullish with all of the volume up here, but we have to take into consideration the move that we had. And after that big of a move in the overnight, and we're right in front of known unknowns, it would make sense to see them take profit. And so we got a lot of volume up here. But it's that same resistance that we've been dealing with through this whole time frame. It's not a perfect level, but they'll front run it. Liquidity resides on the other side of the pivot. So it'll be on the outside, or they'll front run it and liquidity will be in front of the pivot. And that's what we got yesterday. It's what we got today. For the week, we are still within the boundaries of what we were supposed to do. The green and the red lines define the range for the week. This is how far we could move, and we're still there, right? We haven't even hit the edges, even with yesterday's sell-off. We're at the 10-day. You have to like really squint at it to see it, but the label shows we're there. So we got close, pulled away, we got close, and then we pulled away again, and now we're there. And it'll be the first time that the blue line has cut below zero since April, when we had that 6.5% pullback. Now, the other side of this, when we come back out, come back above the zero line, is generally a nice follow through. But we're not there yet. It still has to play out. Even if it's just going to come down and, chop about there for a little bit, it still needs to play out. For the move yesterday, we've pretty much retraced it. But if we're looking for the question of, have we moved too far, too fast, and does it owe us a pullback? No, we already got it, right? It rebounded already. And for the 10-week, we're not even 1% away. So plenty of room to expand higher or lower from here. And my change percent was another one of those that I ended up removing. Boy, when I clean house, huh? I got rid of 600 and something indicators the other day. They just stack up, Next thing you know, you've got a massive amount and you got to clean house. Yeah. But it didn't do what it normally does. Normally, if you have indicators on the chart, it won't remove those indicators. And all of my indicators that I generally use stay on the chart. So it didn't work because here I have been all week picking out missing indicators that I noticed, like, oh, my change percent is gone. Where the heck did that go? And I'm not finding it. I will have to hunt it down later. Change percent day. Ah. Well, I'm not going to sit here and put it on all of these. Although, really, we don't have anything else to look at. So this will just take a second. I'll show you guys a neat little trick. I want these two on all of my charts. So save as a set. Now that I've saved it as a set, I can either go into each one of these and apply it as a set, or just save this entire thing as a style. Change up here that I want to apply that style to all of the styles in my group. And apply it to all of the studies in my group, which I just did, right? Then we got to change that back out. Don't forget that you made that change so you can change things back. Ta-da! Heck of a lot faster than going in and doing that one by one. But got to clean up the house too. So there we go, 5-bar change over the last 5 days. That's what the market looks like. The only one down is tech. The Mag 7 is more than just tech, right? It's got consumer discretionary in it. So, that idea, and we're just getting started, that the Mag 7 is going to take down the market, or that the rest of the market is going to play catch up. It's really kind of looking like the rest of the market's going to play catch up. So far, this is kind of encouraging, right? Now, granted, we haven't really gotten too deep into the Mag 7 yet, but Where's that big, massive sell-off, right? Where's this 5% pullback that we had in the ES? And what was it, a 9 or 11% pullback that we've had in the Qs over the last week or so? It's certainly not reflecting in that chart that we were just looking at, the grid with all those 9 sectors. This is not there. I do like copper. Got out of most of my copper after it really kind of topped out. But we were due, right? With the extension in the MACD like it was, we're kind of due. And you can see why I got out. That's a really big head and shoulders, by the way. A really big head and shoulders. We're back down to that 200-day. I mean, building materials is trying to hold up. I'm pretty sure I have a little bit left on in copper, but I got out of most of mine. I want to see this head and shoulders play out too. Well, Rio did good on earnings. $1.93% this morning in copper. That's a heck of a move. This is forming out to be a really nice failed flag play. It still needs to fail, but once we come out of this base, and this is IX10, so once we come out of this IX10 pattern, it's game on, and we're coming out, right? This is that's the pattern right there. Man, that was a really tight pattern. So there's your copper IX10. This is a 10-period moving average, so we do got to get above that. The 200 is sideways, so I'm not overly stressing on that 200. And for a TRB, I mean, generally speaking, they owe us a move back to the top. Just this is a really big move. So I'd watch that 4.37 area for a half back rejection. But it's a really nice IX10 pattern. IX10 is just an inside day that's multiple days in duration, right? If it was just one inside day, we would just call it an inside day. When it's multiple inside days, then it's an IX10. We'll see. So nat gas is down. Semis are up. The FANGs are up. China ADRs. Just China, right? Without even looking at the tech ones, just plain old China is up. Emerging markets, which is basically China, that's up. Tech, gold miners, oil and gas exploration, which I guess would tie in with crude being up, more of a dead cat bounce or knee-jerk reaction. Industrials, it'd almost be easier to say that everything is up, and we know it's not everything, but there's some really good numbers. Cloud is not yet, but that really doesn't often move in the pre-market. There's just days where we don't see anything in there until 9:30. So airlines are really still feeling the pressure from that crowd issue, that CrowdStrike debacle. And now they're scrambling for time. I was reading on Seeking Alpha that the government is hitting them and they're asking for time. We'll see how that plays out. Could get a little bit of a bounce once we get the news. Sell the rumor, buy the news. So we'll see, but they are down this morning. And really, that's about the only two, nat gas and airlines. And the VIX, of course, but I mean, the VIX couldn't sustain that anyways. If we look at some of the ones that are up, like semiconductors, it sounds great. You know, oh yeah, semis are up. But this was a heck of a beatdown. So sure, it might be up, but it's still inside of yesterday's range. And there's still this sell zone sitting up here that every time we get into it, we've sold out of it. 1, 2, 3, for the last 4 days. Every time we've got into that level, we've sold out of it. We don't know if the selling is done yet. Plus, you got to look even past that to all the selling that happened before we made this new leg down, and then the selling that happened before that. So sure, semis are up this morning. Cheers. For how long? I still like this anchored VWAP 222 for SMH. I don't think we're done yet. Crude made it down there, got the bounce on the anchor. This is more knee-jerk, right, than anything else. China ADRs, what a move. From the low all the way down here at 26 to all the way up here to the anchored VWAP, no less. But it's still just that. It's right in front of an anchor. And we've seen that selling at this level. I know wicks aren't a fantastic story, but they're still a story. Every time we've come into this zone, since we finally managed to break through it, we've sold out of it. So Baba, Baidu, JD, PDD, that group, not expecting any sort of rebound rally out of those. They're just stabilizing a little bit. Expanded tech, that was a nice reversal, closing way down here. We're now way up here at the top of that bar. But again, all that selling. And that's more of an algo print than anything else. We're not seeing any flows here. That would be seeing pre-market candles actually forming and moving, and we don't have that. China's up, which we saw that with the K-Web. Tech, same thing, lots of selling. We haven't managed to get through this zone without selling, but we did get down to the anchored VWAP. I think if we test that level again, we'll break it, right? We keep talking about those wicks on the sell side, about every time we get up there, they sell into it. Well, every time we've gotten down here for the last 2 times, they bought into it. ADP hit, huh? Nice. Wow, actual 122, forecast 150, previous 150, revised 155. So we'll see what their revised numbers are. We're getting these today. We'll see what they revise them to. But that's a difference, right? So that's a big change. That kind of implies that Friday might have some fun with them non-farm payroll numbers, huh? Now see this grid. Um, Usually they get like the 2-year, the ES, and the dollar. So that's what I rebuilt. It's what I use here, except sometimes I use the NASDAQ in the middle. There's your 2-year, there's your ES, and there's your dollar. It's a nice little setup, right? I don't sit and stare at this all day, but I like it when we're going into events, especially when you're starting to get the move. Because for this to continue to go up, we want to continue to see the dollar fall and the 2-year fall. So if the dollar and the 2-year bounce and start rising higher, then the expectation would be we expect some resistance and we'll start to fall, right? But remember, correlations have been broke, right? Even our inverse correlations have been broke. So yeah, grains of salt. And even a broken clock is right twice a day. I'm bound to get it right once in a while, even on accident. I know that doesn't inspire confidence, right? Think maybe those China moves this morning didn't like that. No, it bid right back up again. Look at that. Yeah, silver's still pushing. Gold rebounded. Um, I mean, we're still tech isn't doing anything. Tan solar isn't doing anything. And financials stuck it on this move. You can see it drop down and came right back up again. I would keep my eye on financials today. They'll probably be that direct connection to what's going on in the 10-year. So keep that dollar moving lower. Keep the 10-year moving lower. And everything should play out until FOMC at 2. Remember, we still got more data coming in this morning. But if QRA is in line and it's just a nothing burger, then that'll just give the S&P and the NASDAQ freedom to move. Not really pushing it one way or the other, but say letting these job numbers continue to drive us however they're going to drive us until FOMC. So we'll see. It's a good start. This has been significant resistance though all week. And it's kind of a big deal if we're going to get out of it. Get some of these lines out of here. $55.45 is the 111 warning center. And then 55.50 is the options level of concern. And 55.58 would be the 1-2-3-6. And we're already well above the ADR full. Without a market maker move, there's nothing to add to this. But we've seen before where we can take this whole level and we can just project it to the upside. And that still comes in less than our measured move. We're already through the R1. If we can get through R2 before 9:30, R2 can act as a support level, especially since this is a wide pivot. You know, we've talked before about if the market opens on the other side of an R2 or an S2, that it can act as a support or resistance. But if it's a very narrow pivot structure, then it's really easy to get to an S or an R2. It won't be so easy to get there because today's isn't so narrow, right? It's a much wider pivot structure. But R1 is at 55.08 and we're past that. So we're going to be looking for R2. Let's turn that cloud off. $55.65 would be that level we need to get through. Even just opening above the R1 will very likely make our R1 some form of support, but it's not enough, right? That won't stop price when econ hits. Got about 5 minutes for QRA and then watch the clock. It's going to be coming in various bits and pieces all day. Be careful, be safe. I'll see y'all tomorrow.